Hello guys, welcome back in today's crypto technical analysis. I believe it's time to update the market. In today's episode, as usual, we do a multiple time frame analysis for BTC. However, before we start, if you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. The weekly levels are still the same. I'm not going to cover too much. However, I was going to say about this too. In the last few weeks, I was talking about 18th of July, the bullish engulfing candle, as well as the 8th of August, the bullish engulfing candles. So as you see, $25,000, $24,800, $25,000 heavy resistance based on a daily time frame, as well as we didn't get a decent bullish setup based on a daily time frame. That's another issue. Based on a weekly time frame, the levels are still the same as I mentioned in the previous videos. $33,000, $36,500 are heavy resistance. However, as I mentioned, always below the resistance lines, all these bullish engulfing candles or bullish candlestick patterns have a less effect, that the market was excited in those 2 weeks. So moving on to a daily time frame. If we're analyzing the daily time frame, as soon as we lost on the 26th of November, $60,000, $59,500, retested it to the dollar and lost the support. First leg down, a bit of consolidation, the second leg down, and overall, we had 70% done in the market. And if you're doing a leverage and exited on time, there is no need to panic, and we do not have a bullish setup at this stage. So as I said, if you're doing a leverage, you do the math with it 5 and 10 times maximum. However, as I said, on the daily time frame analysis, I was keep mentioning that 24,500, ideally 24,800, as well as $25,000 are going to be extremely important levels based on a daily time frame, because this is a bridge that you call between higher time frame and mid time frame. So as you see, perfectly, we got rejected right from $25,200. That was a fake out, you can call it, and stopped late longs as well as early shorts. So the market doesn't look good. The current condition of the market, as I said in the previous video, $22,900, $700, as well as the next level maximum, we can go down to around $21,500, $22,000 are extremely important. So with the today's candle, we are just the daily time frame, as I mentioned in the last videos, as long as we were above $23,000 and daily time frame could have consolidated. As I mentioned in the recent tweets as well, one after another, shooting stars right on the resistance, it's not a good sign. And as a result, we are seeing heavy done on the market. So still following the same levels, $23,000 are going to be important based on a daily time frame as a resistance. Without claiming $23,000, $23,200, it's going to be early for us to talk about the daily time frame. We'll get back to the consolidation. So moving on to the 4-hour time frame. Before we do a further analysis, if you want to learn all these technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and one-on-one intense masterclass is available, where I'm going to teach you how to become a profitable and professional trader in the market. It only takes you 5 to 10 hours to master this all. And during the course, you will learn day trading, scalping, swing, and as well as the long-term as an investor trading systems. We're going to analyze the 4-hour time frame. Recently, once we broke $20,000, as you remember from the system, the hybrid system that we're following, to the dollar, that we claimed the support, important support level, it was acting as a resistance, and then at around $21,000 and $21,500 at around here, we started taking a long setup. So as you remember how the important 25,000 level is. So overall, we had about 18% pump in the market and 18% spot profit. However, if you're doing a leverage with a 5 and 10 times, you do the maths for yourself. I also mentioned that exit level based on a 4-hour time frame is going to be $23,000. Without breaking $23,000, it's going to be early for us to talk about the trend change based on a 4-hour time frame. So if you're calculating that average from $21,000 all the way up to $23,000, we had another, after the trend change, 10% pump in the market. So again, if you're doing a leverage 5 times, which is a 50%, 10 times maximum, 100% in the last couple of weeks. So there was no panic. I was giving these levels in advance. Also, this was heavy resistance, as I said. As you can see, perfect rejection to the dollar, rejection after rejection. On the daily time frame, we saw one after another shooting star candles. The first resistance based on a 4-hour time frame, 23,200, ideally 23,500. This level is going to be first resistance. Without claiming this the resistance, it's going to be early for us to talk about getting back to the consolidation level based on a 4-hour time frame, which is early to talk about it. We had a trend change after a couple of weeks that we've been on a bullish trend. We spent about 1 month on the bullish territory, so it is early for us to talk about the bullish scenario based on a 4-hour time frame. The levels that I'll keep watching in the coming hours and days, 0.618 is going to be extremely important level based on a 4-hour as well as the higher time frames. That's going to be $21,200, $20,800. So based on a 4-hour time frame, as I said, $23,000 is going to be extremely important, and highly likely we're going to get a rejection from that level. And then the next level that we have to watch is going to be 20,000 all the way up to 19,300 levels. And these levels are extremely important in order to keep the current trend. Otherwise, we will see lower levels than $17,500 in my opinion. Moving on to 2-hour time frame. Based on a 2-hour time frame, as soon as we saw this fake out, and in the last video that it was on the 15th, as I said, based on a 1-hour as well as 2-hour time frame, this is going to be our local resistance. That's going to be all the way up to $24,500, $600. And it was likely that we're going to get a rejection because 30-minute as well as the 1-hour time frame were heavily under the bear's control. Beautiful rejection right inside from the resistance. And then we also lost at the same time. This is based on a lower time frame. And once we lost $23,000 with a single candle, as you can see, and we had a further dump in the market. So this is what you call it from lower time frame. That's going to connect the mid time frame, and that will give you a trend change, and that will allow you to stay in the market. So you entered $21,500, and the exit level was based on a lower time frame. That resistance level, local resistance provided 72-hour plus in advance, all the way to $23,000 as well. And we saw heavy dump in the market, and that's nearly 13% dump in the market. Once you entered from $21,000, $21,500, all the way rode the trend up to $25,000. And if you exited based on a lower time frame as well as the mid time frame, you're up by already nearly 13%. However, exiting from $23,000, that provided massive 7.5% profit. Based on a 2-hour time frame, support levels are still the same that you have to follow, the fib levels. However, the first resistance is going to be 22,700, this area, and all the way up to $23,200, and highly likely I'm expecting a rejection from there. I'm not going to cover 1-hour time frame. It is heavily under the bear's control, and we came to an end of this episode. You got the levels, play level to level, and if you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.